The Bitcoin Group, the American original. For over the last 10 seconds, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our panelists, Chris Ellis from the World Crypto Network.
Hello.
And Will Pangman from Topeki.
Hello.
And I'm Thomas Hunt, also from Issue 1, Bitfinex Hacked. Popular Bitcoin exchange Bitfinex has been hacked. They lost access to the coins in their hot wallet. However, thanks to proper security practices, 99.5% of their Bitcoins is kept in secure multi-sig wallets, limiting the loss to only 0.5% at most. Chris Ellis, your thoughts on yet another centralized Bitcoin exchange getting hacked?
Yeah, I mean, this is going to keep on happening because these exchanges are the weakest link, and a security chain is only as strong as its weakest link. I did have the fortune, though, earlier on to listen to PGP, Phil, from Bitfinex himself. He came on to the Whale Club. That's whaleclub.co if you're interested. They've got a little TeamSpeak channel, which is where you can kind of get together audio only and listen to each other talk about the Bitcoin price all day. So I went in there to see what all the fuss was about. Phil came in. He answered a bunch of questions. He was very candid. It was the complete opposite to MT Gox and what the thing that happened at Bitstamp last year. And he was very open and transparent about the whole thing. He was basically saying, look, we expect to get attacked as an exchange. We deliberately keep everything segmented and separated, so we have different wallets on different servers so that if we do get hacked, the liabilities are very limited. He said that he did not have final figures yet, but the estimates of what the amount that was stolen was something up to about 1,500 Bitcoins, which would be about $300,000 worth, which is not enough to obviously put the exchange out of business. So actually, you know, in spite of the fact that I've always been very critical of these exchanges, I do think there are more efficient ways of trading in a decentralized manner so that we don't have to be giving our private keys over to these businesses. I do actually applaud the team at Bitfinex for actually coming out that quickly and speaking to people with an AMA. I thought that was very impressive.
Will Pangman.
Yeah, I think you know, the transparency from this has been fantastic. It's, you know, night and day from a little over a year ago what we're experiencing with all the attacks happening to various other companies and exchanges. You know, they had protocols in place to mitigate this, you know, the risk of trying to serve your customers rapidly, have some amount of funds in a hot wallet so you can quickly execute deposits and withdrawals for your customers, because that's a huge thing for an exchange to quickly do that, and it's you know, it's a problem that needs to be solved. I mean, solutions like ChangeTip, where there's no accounts, no address, no email addresses, you know, just Bitcoin, just crypto working, really take out all of these big, you know, security risks, which these exchanges right now, as they stand, you know, they serve a very important function, especially Bitfinex being kind of like the giant. I was really interested to see that they got hacked because they are one. You know, some companies maybe have gotten hacked, they just haven't told their users. You know, who knows what's going on in China, for example. But basically, Bitfinex was like the shining example of how to do everything right. And I think even after an attack like this and a hack like this, they still are, apparently. If, in fact, 99.5% of customer funds were kept offline, you know, 1,500 Bitcoins in a hot wallet seems like a lot. But again, these guys are the titans of the industry right now. You know, so that may just be their hot wallet size. So it sounds like their process that they had in place was very successful, and you know, I'm sure we'll hear more once they roll out you know, the new system for the hot wallet deposits. You know, however that's going to work for their customers, because that's really what they're fixing and probably doing other tests as well before they go back online fully. But yeah, it's very interesting to watch. I think everything, you know, this is night and day compared to exit scams and major implosions, you know. So kudos Bitcoin, you know, ecosystem for beefing your security.
It is interesting, though, the size of these hot wallets. Perhaps we'll see limitations on their size soon. Exit question: is there an unhackable way for someone else to hold on to your private keys? Chris Ellis.
Well, no, nothing's unhackable, but it's about distributing the risk and making sure that every stakeholder in that chain takes full responsibility for that risk. At the moment, we're not. At the moment, we're taking unmeasured risks, and we're not thinking about the ultimate downside, and we're, not really being honest with ourselves about our tolerance towards those risks. I would encourage you to look at distributed systems like OpenBazaar, for example, which will be a peer-to-peer exchange, and it will basically encourage the use of multi-signature, so that perhaps, for example, an exchange can have one of your private keys and you can have the other one, and then you store one on paper. So you store one on your computer, one with the exchange, and one as a backup, and you need two in order to activate a trade at any one time. That's still a long way off because the technology has a lot of latency. It takes time to execute trades that way. It's not going to be as quick, but I am optimistic for the future. We just need more engineers and more, the community to really get behind this and push it.
Will Pangman.
The exit question. Yeah, I think hackable is like a hugely broad term. There are all kinds of ways to hack things, but I guess electronically, it's very, very difficult to strictly electronically hack multi-signature. So incredibly difficult if done properly. And there are lots of solutions out there doing this. Andreas Antonopoulos just announced his, friend of the Bitcoin group. He just announced his company, Third Key Solutions, something he's been doing for months prior and just kind of hanging his shingle now because it's a valuable service that he's tested and that the marketplace is in demand for. So yeah, I mean, solutions like this go a long way, and the average user is now able to do this stuff. If you're compelled to learn how to use a Bitcoin client, it's basically not much more difficult from that point to learn how to use multisig. So that's what people need to be thinking about in terms of securing their funds more and more, and I think that's what we'll see. That's what we saw with Coinapult when they were hacked. They came back with multi-signature everywhere, including for their hot wallet, with the help of BitGo, I believe. They, and BitGo's helped out. This is where the community can help itself, and they are. And that's why I think, with all the news or talk out there about how the Bitcoin community is maybe eating itself, and there's lots of, rivalry and just maybe consolidation that's uncomfortable, there's still this ethic of rising tide raises all ships, which we're seeing, and this is a testament to that. So multisig in general is a testament to that.
Moving on, issue 2. New Bitcoin license rules, and Lawsky's leaving. He wrote the rules on the Bit license. His ideas now govern the way you can buy and sell Bitcoin in New York State, and now he's going into private consulting. NYDFS Super Nintendo Lawsky will be a Super Nintendo. No more. He's stepping down, dropping the mic, and leaving the stage. Will Pangman. Was Lawsky a Leonardo? A Satoshi? Is his work a masterpiece? Is the state of New York and the people of New York better off with Ben Lawsky's Bit license and his new job privately consulting on the law he wrote?
Most of the time when bureaucrats, at least in history that I've seen, especially in New York for that matter, they're much more cagey and clever with the way that they do exactly what Lawsky has done, which is basically to work for an initiative to create a bunch of friction and then sell your brain, sell yourself as a consultant, advising the very people you've restricted and bound and tied and made more complicated their processes, guide them through your tangled labyrinth that you just wove for them. And so it's so transparent how he did that, right? It's so obvious, and because this community is very vocal, and Reddit would blow up anytime Lawsky would say anything in public, or any conference he would speak at, or any conference that anyone else would lambaste him in their talk, So, yeah, I think people are laughing at him in the halls of power because of how transparent, and they're probably upset with him too. They're like, dude, you're showing our hand here. This is the formula that has worked for so long, and here you go, and you just make it so obvious. So, this is more of the same, but it's also brazenly more of the same in a way that probably won't make a lot of people happy, including the people that we think are on his side. We being like, let's say, the Bitcoin community on Reddit.
It may be a bit farcical, but everyone loves a farce. Chris Ellis.
Yeah, well, this is it. You don't play a game unless you know you can cheat ahead of time, right? And this is the way it works. It's the golden rule. The people that win are the people that write the rules. And I don't really have a whole bunch to add to what Will said. That's exactly yeah. The one saving grace, I guess, is that we all get to see it. That it's right out there. I've got a picture of a Super Nintendo on my screen. I have no idea why.
Exit question. Who's a better role model for young children? Ben Lawsky, who's now consulting on the very laws he wrote, or Kim Kardashian, who's famous for being in a sex tape and a reality show? Will Pangman.
Definitely Kim Kardashian.
Chris Ellis.
Concur.
Oh, Kardashian for the win. And don't forget, you can watch the Bitcoin Group at thebitcoingroup.com. Night or day, any time of the week at worldcryptonetwork.com. What could be more gratifying than watching the Bitcoin Group? You could even type in your questions right now for the show. Your questions on the Bitcoin Group. Yes, it's true. It could happen. Moving on. Issue 3, Bitcoin block size debate. The Bitcoin block size, the number of transactions that can be in each block, is under major debate lately, with the core developers each sharing their views in public in a massive debate about the future of Bitcoin. But with the core argument being, will making the block size bigger lead to centralized Bitcoin mining? But, Chris Ellis, do we already have centralized mining? Do we need bigger blocks?
So there's been a lot of controversy over this. Bearing in mind that Satoshi limited the Bitcoin block size to help the speed of the download of the initial blockchain, so that when you got the Bitcoin QT wallet and you installed it on your computer, it wouldn't take forever to download. But he didn't intend for it to stay that way forever. I'm inclined to take the side of the engineers here, since they know the protocol inside and out. This was not only proposed by Gavin Andreessen, but also Mike Hearn chimed in on Medium, his blog there, and he was basically saying, look, we know that this tech, we understand it, and the people that seem to be against this seem to be the speculators and the pundits on the sidelines, who I'm less inclined to listen to. So here's how the basic maths works. The smaller the block size, the fewer transactions that can get in, therefore it's scarcer, therefore people should be incentivized to put in higher transaction fees to encourage the miners to include their transactions in the block. But as you decrease the Bitcoin size down to 0, the closer it gets to 0, the more you undermine the integrity of the network as a whole. So once you've undermined the integrity of it, utility now ceases, and people use alternative methods of payment like Visa and the legacy payment system, for example. So you have to hit a sweet spot. Now, it's not the same in reverse. Just unlimiting the block size and letting any number of transactions in doesn't mean that people will be choosing 0 transaction fees with their transactions. And why is that? That's because each miner has full discretion over what transactions they include in the block. So what will naturally happen is that miners will simply say, well, no, I'm not going to put in all these free riding transactions, they're not going to pay any fees, and so naturally people will be inclined to pay more. In the latest version of the Bitcoin QT wallet, it actually gives you a sliding scale of how much transaction fee you want to pay, and it will tell you how long roughly it will take to get put in the blockchain. So if you don't need the money to go urgently, you can say I don't want to pay very much, but if you want it to go through right now, you can pay more. I think that's perfectly natural. It's important that because it takes a long period of time to get any changes made on the Bitcoin network, because it requires consensus on all parties, it is right that we do this reasonably urgently. Like, we shouldn't really have left it this late. If we want the Bitcoin network to scale, we are going to need it to be more than just 3 transactions a second, which it currently is, if it's going to compete with anything like Visa, which is orders of magnitude faster. So I'm tempted to go with the experts here, not with the pundits.
Will Pangman.
Yeah, I have to agree with Chris. I certainly lean toward the engineers on this, especially, you know, having had conversations with some of them. I've been fortunate in that regard to talk about these very issues with them. So, you know, I'm like Chris said, they know this stuff inside and out. They've been preparing for these potentialities, and you know, there's really vibrant discussion about this and lots of interesting takes on it that really make the mind boggle at times too, which is interesting. I tend to think, with everyone worrying about the centralization of mining, even if the block size doesn't change in the next 5 years, which likely I think the prognosis was like the next 2.5 years we might reach the 1 megabyte block size, which we're not currently at, but it's good to have foresight and change these things sooner than later, obviously, for the health of the network. And that's the thing. We want Bitcoin to grow. Most people want Bitcoin to grow. Even the people who are critical of the block size increase want Bitcoin to grow. In order for Bitcoin to grow, it's got to grow physically, actually, realistically grow here in these ways. And you know what? We'll run up against Moore's Law on some things. We'll run up against raw materials bottlenecks, and we'll see centralization temporarily, and then we'll see democratization, commoditization and decommoditization. We'll see that with various things around Bitcoin mining, especially. People are critical of 21. I'm kind of a big, really interested bystander about what's going on with 21. People want to figure out a way to democratize or decommoditize mining like soon, before the third block halving, which would be awesome, for a lot of people, because after 4 or 5 block halvings it becomes more trivial, and maybe that's why having miners everywhere is already at that point saturated is a really, really ingenious and forward-thinking plan, by Balaji and people in 21. So yeah, I think these things work themselves out. The economics of Bitcoin were really laid bare on purpose so that, freedom, human activity around it could determine its future. And enough people are incentivized to preserve this thing, and that's what everyone in this argument is trying to do. It's really interesting. Get involved in this discussion, because you'll learn, and this is, I think, want it to stay small. That's a conservative approach, and that's being afraid of change. I would say, I would challenge you to think of that. Being afraid of change is maybe not a wise position in this regard. Embracing change, like Bitcoin itself emerging onto the scene, which I think we'll get to in the next issue. It's going to go through these moments, these huge transitions, whether it's mining, whether it's acceptance levels of libertarians on up to Wall Street, whatever. So. Buckle up. Grab your popcorn.
Exit question. What's your favorite Tetris block? Chris Ellis, go.
I love this particular Tetris block by Paige Peterson, who drew this really cool diagram with Peter Todd that shows the difference between centralization, distributed, and decentralized. Look at the little hands that control the distributed network. And this is what happens when you deal with companies like 21, where they're like distributing the mining, except who controls the miners? They do. So it's just like, that's my favorite Tetris model. That was a very well answered question.
Centralized distribution. Will Pangman, your favorite Tetris block?
Well, definitely the straight line block for sure. The high score one. I always would line stuff up for that. But yeah, just to comment on Chris's point about 21, I'm definitely a wait and see guy with that. But I do see a path toward kind of the ideals that I know Chris and I share in my conversations with Chris. I do see a path. We'll see if they take it. We'll see.
And we all dream of Bitcoin mining toasters. The long one is the correct answer. Moving on, issue 4, Wall Street Bitcoin. Wall Street has taken an interest in Bitcoin lately, with Nasdaq creating its own Bitcoin-based stock market. Apologies to Medici's Patrick Byrne. Goldman Sachs investing $50 million in Circle, and even NYSE, the New York Stock Exchange, launching its own Bitcoin index. Wall Street and Bitcoin, not just the blockchain, are suddenly good buddies. Is this good for Bitcoin? Will Pangman.
I don't think it's bad for Bitcoin. I think this is what was always going to happen if it stuck around longer than a year or 2 years. And Bitcoin has been through some incredible hits, even before the Mt. Gox implosion. That one probably sticks in everyone's mind as the biggest, but yeah, as long as it survives, I think, and it's relatively, its integrity remains relatively true. For me, I care about two things. I care about the fixed total supply and the fixed rate of issuance. If either of those things change, I'm going to look differently at Bitcoin. But on all other things, even technologically, I'm pretty okay with how it's going, and even in the proposed changes out there. So yeah, and including with Wall Street jumping on board. Everyone wants to see Bitcoin get to the third world, and it's probably not going to without, it would eventually, I think, in the long term, but it's certainly going to get there a lot quicker with some Wall Street money and ties behind it. It certainly is. And then it's up to the communities around, which are already in place, which is unlike, rallying around a currency. These authors, these books that are coming out, whether it's Nathaniel Popper or the guys at Wall Street Journal, they all talk about just how amazing it is that there's such a community fervor from all walks of life, all shapes and sizes and backgrounds, around a currency, per se. It's much more than that. Obviously, it's a network. But once you understand that, so yeah, this is part of. We want more participants in the network, as long as they can't break the rules and don't try to, and we can tell if they're trying to in real time, like Bitcoin allows. Then yeah, anyone come and join Bitcoin.
I've heard that Wall Street's even trying to bribe the CEO of Bitcoin, but they still can't find him. Chris Ellis.
Yeah, I think this Wall Street narrative has been running for some time, and I think it's politically motivated. So some of the stories that come out in this way and have these kind of SEO keyword terms are really there as a way of controlling the public perception and therefore the price. However, there is some credibility to the Nasdaq story, because I did look into it. In fact, why don't I pull it up on screen right now? The Open Assets Protocol, which looks pretty cool. It basically allows, so if you just Google this, it's on GitHub, Open Assets /Open Assets Protocol. It basically gives you the abstract. It looks pretty cool. It basically allows you to buy up a section of Bitcoins, and of course remembering it goes to the 8th decimal place, and allows you to assign value on top of those coins. So you can say that it's, 1 Satoshi now equals an orange or something like this, or a share in Apple stock, for example. And then if you want to transact on the Nasdaq, instead of going through their usual channels, you can simply send that Satoshi on the Bitcoin blockchain from one public key to another, and thus effectively changing the share issuance. So, I've been calling for this for a long time, that we should be really treating Bitcoin for what it is, which is a distributed database that anyone has the ability to take part in. But more importantly, it should be no reason why public exchanges like the Nasdaq, even a small department like the one that's looking at it at the moment, shouldn't be putting all of these trades publicly. That's what they're supposed to be. They're supposed to be public. Now, what's not clear from the press release is whether they mean people will be executing trades on the blockchain. So they'll be using the colored coin the way I just said, which is where they will be trading and expressing their intent through colored coins, or whether they will just be using it as an audit trail. So actually, or execute it the way you used to through a broker or through some software, and then they'll simply mirror that into the blockchain so that anyone can then inspect it, kind of like a public API, but you're using the miners and all the hosts to basically be the host of that API. But no, I think this is exactly what it was meant for, and it can only be a good thing, because it will increase the intrinsic value of the blockchain, and therefore, in theory, increase the value of Bitcoin as a whole.
We were just going to call on Will. Will's disappeared. We'll move on to our exit question. What's your favorite Wall Street movie? Goodfellas, Casino, or The Godfather?
There's no competition. It's The Godfather.
Yeah, obviously The Godfather is the winner in that category. And Goodfellas is a very good movie. Casino is also very nice, a little long, but nothing compared to The Godfather. Will, would you agree with us that Godfather is the best Wall Street movie?
I was going to say Blood In, Blood Out is the best Wall Street movie. Anyone ever see the Blood In, Blood Out series?
I think I've seen the first one or something. But yeah. All right. Well, we don't really have any questions today. There's still a chance if you want to put your question in. We'll take a look at it in the last few minutes of the show here. Otherwise, I think we're going to move on to predictions or story of the week. Chris Ellis, do you have a prediction or a story of the week?
Well, I just wanted to check in with everyone, say hi, and it's been a while since I've been on air, and I just wanted to let you guys know just briefly what I've been up to. We've been working on Pro Tip. We've been testing it out. Thank you to everybody that's been sending that feedback. We still need more, though, because it turns out there was a few more bugs than we realized, and also we're not really happy with the user experience at the moment. We want to improve that, and we really do need your support in that. Over the weekend, I'm hopefully going to be putting the new website together. We also have been receiving people who say that they don't know enough websites out there that have Bitcoin addresses on them, and we're going to sort that out as well. The latest version of the app, if you were lucky enough to get hold of a copy, it is shareware, so you're free to share it. We're not going to promote the download of it until we're kind of happy with it, but all the recipients of the code are free to share it. In the latest version of that download link that you originally sent, you can download it again. It will be an updated version, and we have now included a few examples of some sites that have Bitcoin addresses on them, so you can go try it out. But hopefully this weekend I'll get the new site up and running, and that will include a list of all the Bitcoin supporting websites. The other thing I'm working on is the World Citizenship Project. I'm back on that again. Actually, that one ended up sort of interrupting ProTip, which sort of delayed that crowdfund. So now I'm kind of back on to where I started again. And been a lot of really good progress. I've been updating it. We're planning a new meetup in the next couple of months. I would also like to do a hackathon. And Tom, I'd like you to be a part of that. We'd sort of like to get together, a group of hackers going through issuing these identities. Eventually, I want to bring that back into with ProTip as well, because then you can start to identify who you're tipping via these kind of identity systems. So yeah, I'd like to. There's a lot of things that I want to sort of get on top of. My living situation's been a little bit erratic. I'm in a place right now which hasn't had great internet, not great lighting, as you can see. But yeah, I do plan on getting more into it and doing more hacks like we were doing last year. So that should be a lot of fun.
All right, Will Penguin.
Yeah, I don't know if it's any kind of prediction, but I know the topic earlier about Lawsky going into the private sector. I predict he won't be climbing the ladder as he may have wanted to, with the governorship, his sights on the governorship leak that came out, last year or whatever. I don't wish the man any ills. I just wish he would, maybe change his priorities or his allegiances or whatever. But I don't wish him any ill. But I don't predict that his private sector business of consulting on the problems that he created for companies to navigate will go very well.
No President Lawsky. Too bad. And finally, I don't have a prediction this week. I can't think of anything to predict, so I'd just like to recommend this article from Mashable entitled The Oregon Trail Generation: Life Before and After Mainstream Technology, and what it's like to live in this strange generation after Generation X, but before the millennials, and to have grown up with technology, but to still remember a time before it. Well worth reading. Oh, we're out of time. Until next time, bye-bye.